Welcome to this explainer on the legendary investing wisdom packed into Reminiscences of a Stock Operator. Today, we're tracking a truly fascinating journey. We're going to look at the evolution of a trader, watching him go from a bucket shop gambler making rapid-fire bets all the way to becoming a Wall Street master who genuinely understood the deep underlying mechanics of the market. It's a crazy ride of immense gains, devastating losses, and ultimately a profound financial coming of age. So let's dive right into this incredible story, because learning to master the stock market, well, it's really a story about mastering oneself. I mean, it's just wild to think about the trajectory here. How does a 14-year-old kid with a knack for mental math eventually end up maneuvering millions of dollars? Let's take a look at exactly how that happens.
All right, part one, the boy plunger's early wins.
Our story kicks off with a kid taking a job as a quotation board boy in a brokerage office. And it turns out he had an absolute photographic memory for numbers. This led to his unbelievable rise as a market prodigy. He rapidly built a fortune just by memorizing how prices behaved right before they moved up or down. By 15, he's laying his first $1,000 in cash right in front of his mother, money he racked up in just a few short months. By 20, he's sitting on $10,000. But then, at 22, he moves to New York and loses the whole shebang. So let's break down how he made it in the first place. As he put it, I didn't ask the tape why when I was 14. The reason can wait, but you must act instantly or be left. You see, he didn't care at all about business fundamentals or dividend reports or the latest Wall Street gossip. He literally just used his memory to successfully scalp tiny profits at small, shady brokerages known back then as bucket shops. In a bucket shop, you weren't actually buying the stock, you were just placing bets on the price fluctuations printing on the tape. And his system of pattern recognition, it was absolutely perfect for it. He got so wildly successful that they actually nicknamed him the Boy Plunger. Which brings us to part two, the Wall Street reality check. When the Boy Plunger brought his strategy over to the actual New York Stock Exchange, reality hit him, and it hit him hard. He moved to New York entirely ready to trade at a legitimate brokerage, completely unaware that he was stepping into a totally different game. His bucket shop system failed miserably, and here's exactly why. In a bucket shop, he got instant execution. If the tape read 105, he bought exactly at 105. But with a legitimate broker, by the time his orders actually made it to the floor of the exchange, the prices had completely changed. His tape reading was accurate, sure, but the tape was essentially reporting ancient history. Plus, in a real market, his own massive orders actually moved the price of the shares against him. Now, this execution lag culminated in a totally catastrophic event. 50 grand. $50,000, that is the massive stake he had built up by the spring of 1901. But then, on May 9th, a massive market panic sweeps in. The market is fairly boiling with these unprecedented wild fluctuations. He accurately foresaw a massive break in prices and put in orders to sell short at the market. But the ticker was lagging so far behind the actual trading floor that his orders were executed at the absolute rock bottom of the drop. Then, when he tried to reverse his position and buy, the market had rebounded and he bought at the very top. In one single day, that entire $50,000 just vanished. He hit the nail on the head about his mistake right here. The ticker beat me by lagging so far behind the market, I was wiped out by something that was unusual. He realized, actually, he learned the hard way, that playing the legitimate game blindly, without totally understanding execution lag and market impact, was a one-way ticket to going broke. He had essentially brought a BB gun to hunt big game. His bucket shop system was just fundamentally flawed for a real exchange. All right, let's look at part three, beating the Buccaneers. So now he's flat broke, but he knows his tape reading is still dead accurate for a very specific type of game, and he had to survive. He knew he wasn't ready to beat the legitimate market just yet, so he heads out west to essentially scam the scammers to rebuild his Wall Street stake. He traveled out to St. Louis specifically to dodge recognition, because all the eastern shops already knew the Boy Plunger. He's literally using fake names like Horace Kent, deliberately trading in these massively crowded rooms just to blend in, and ruthlessly extracting cash from crooked wirehouses using those flawless tape reading skills. He was racking up thousands in just a matter of days. He was so incredibly good at betting on these tiny fluctuations that the bucket shop owners literally caught on and banned him. One boss dragged him into a back room and told him flat out, "I make my money coppering suckers' bets, and you don't belong here. The safe is locked for you." The scammers just straight up refused to take his money anymore because he wasn't a sucker. He was beating them at their own rigged game. Moving right along to Section 4, Gambling versus Speculation. Returning to New York with this freshly won stake from the Buccaneers, our protagonist really started reflecting on his past failures. He realized that just betting on tape fluctuations was gambling. It wasn't actual stock speculation. He needed a fundamental mental shift. And he learned this profound lesson from a quiet, older customer in his brokerage office named Mr. Partridge, affectionately known as Old Turkey. Other traders were constantly bugging Old Turkey, urging him to sell his profitable stocks just to buy them back cheaper on some temporary dip. But Old Turkey always refused. He'd just cock his head and say, "Well, this is a bull market." What Old Turkey was talking about boils down to what they called the big swing. Old Turkey knew that the real secret to making an absolute fortune wasn't about trying to catch every small daily reaction or sweating over the tape for a one-point scalp. The real secret was studying general economic conditions, figuring out the overall trend, like a major bull market, and just riding that larger movement. And that leads us perfectly into Section 5, the power of sitting tight. This massive realization from Old Turkey finally pushed him into the final stage of his evolution. He had to stop trying to be so clever with every single tick of the tape and actually learn the discipline of patience. You can clearly see his mental evolution here. He starts at step 1, reading the tape like a bucket shop gambler. Then step 2, trying to anticipate short-term moves. But the real breakthrough happens at steps 3 and 4, shifting his entire focus to general economic conditions, and then, most importantly, sitting tight for the big swing. He was finally dropping the shotgun approach of bucket shop scalping and picking up the high-power repeating rifle of true patient speculation. Now, if you take nothing else away from this explainer, listen to this loud and clear. It never was my thinking that made the big money for me. It always was my sitting. Got that? My sitting tight. Having the vision to be right about a market trend, that's actually pretty common. You can spot early bulls in a bull market and early bears in a bear market all the time. But having the actual courage and the sheer discipline to ride out the inevitable setbacks and dips without panicking and losing your position, that is incredibly rare. As he ultimately concluded, men who can both be right and sit tight are uncommon. He finally understood that trying to catch that last eighth of a point or the first eighth of a point literally costs traders millions of dollars in missed opportunities. If you know general conditions point to a major rise, you buy and you hold. You don't jump in and out constantly, just trying to look like a genius on every minor dip. So, what's the bottom line for anyone interacting with markets today? First, reading the tape or staring at daily charts alone cannot beat execution lag and market impact. Second, you have to learn to tune out the noise of daily fluctuations. They are literally designed to shake you out. Third, your real job is to study general market conditions. And finally, discipline and patience will always outperform panicked short-term gambling. You've got to have the courage to sit tight on your convictions. As you reflect on these timeless lessons from one of the greatest market minds in history, I want to leave you with this final thought. Are you still out there trying to scalp the daily tape, or do you actually have the courage to sit tight for the big swing? Ask yourself if your own impatience, that constant need for action, is the very thing holding you back from your true potential. Thanks so much for joining me on this explainer. Keep studying the conditions, and whatever you do, remember to sit tight.